Good evening, ladies and gentlemen. Welcome to the first quarter of financial year 2023 post-result conference call of RACL Geartech Ltd. I, Neha Behel, Company Secretary and Compliance Officer of RACL Geartech Ltd, shall be your moderator for this call. Before we start the proceedings, all the participants may please be informed that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinion, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, you may post your concern or queries, if any, in the question answer box available, or you may raise your hand as available on the screen if you want to speak during the proceedings. Please note that this conference call is being recorded. We have today with us the management of RACL Geartech Ltd, represented by Mr. Gursharan Singh, Chairman and Managing Director, Mr. Devraj Arya, Director and Chief Financial Officer, Mr. Prabh Mehar Singh, Vice President, Finance and Business Excellence. I now invite Mr. Gursharan Singh for his opening remarks. Over to you, sir.
Have you checked with that they are Hello, gentlemen and ladies on the meet. First of all, my warmest welcome to you all on our investor phone call for quarter ending June 2023. And I hope that you all are in good health and enjoying good weather, although in some parts of the country we are having serious issues on floods and natural calamities. So while we all pray and wish for good health and good luck for those people who are surviving, who have survived these calamities and lost their near and dear ones. So our condolences to those families, and let's hope that Nature God does good for our country. And for us, for all of us, we Indians, there is a moment of pride. Just 2 days back, we had our national flag and moon. And since they say that it's first time that any country could achieve land successfully on South Pole of Moon. So it is really a good proud moment for us. And this really reflects that this country is going in which direction. And we are now, technically with it, it's said that we are the first country in the world who could land on South Pole. So we have bypassed all on one way. We are fifth largest economy and we are aspiring to be third largest economy. But now at least we have already achieved one thing where we are the largest after the, of course, the biggest is the population. But after that, now, again, we are the first country who could land on moon. And let's really celebrate this moment. And once again, I wish you all good health and good happiness. And thanks to you for attending this event. I'll just now pass on to Prabh. He will start the agenda of the day. Yes, Prabh, over to you.
Yeah, hi, good evening, everyone. Before I start, I see, because we're using this tool for the first time, so we hope you are having no issues in hearing us and seeing us. 2 people have raised their hands, so I hope that is by mistake. If there's anything which you feel you're not able to hear or listen, I think in the Q&A section you can write also during the call any questions you have or anything which, yeah, so raise of hands is gone, so maybe that was by default. Okay, so if it is working fine, we can start. I think we have good attendance. So many people have joined, so that is good to see. I will start with the presentation. It is just one slide, and the idea again is today to have a lot of discussions. A lot of questions have come in, so we will want to keep it as interactive as we can. And as always, the Q&A area, you can ask questions. I will keep replying. And of course, Sir and Mr. Arya, they are on call for explaining anything. Okay, so I will just move to the numbers. So we are meeting today for Q1 financial year 23-24, and as in start, we always explain about the company. So welcome all to the RACL Geartech Q1 23-24 investor conference call. We are a company started in 87, based out of New Delhi. We are headquartered in Noida. It is an Indian company. We last year did around, this is again not updated. We did 370 crores odd turnover in terms of revenue. We have two manufacturing locations. One is in Gajraula, one is in Noida. We have few warehouses in Europe. We are automotive components products manufacturer. We do make critical sub-assemblies. We do many other precision-oriented machining jobs. We have 22 active customers. We do around 800 active parts, part numbers. We are into primarily two-wheeler business, passenger vehicles, commercial trucks, agricultural equipment, ATVs, and we are 70% export-oriented company and 30% for the Indian domestic market. All our plants are qualified for ISO, for quality, environment, OSAS, health safety, IT systems. So this is how the company is being run and managed. So for the Q1, no surprises. The results are already there with you, but of course, as a slide. So we did 89 crores revenue for FY23-24 first quarter, which was roughly 11% higher than last quarter same year. In terms of operating profit, we did higher by 30%, which was roughly 23 crores this year from 17 odd crores last year. Profit before tax again grew by 44% from 11 crores to 8.5 crores. This sales, what we are showing near 11%. Usually the first quarter of the company is the lowest for the year, but the growth from quarter year on year is generally higher. This could have been much higher, but there were two instances. One, there were some, of course, export-oriented unit. You have to have certain material in transit, and there is a shipping filing date for the bills. That is how we recognize the sales. So this time, of course, sales was higher, but the recognition in the books was around 89 crores. That is why if the shipping bills could have been filed earlier, this could have been a higher number. Second,
our transit stock increased 4 crores.
Yeah, so this sale actually was much higher. So that was the one aspect. And second, projects are there. The problem is not the demand, but the execution. So of course there are some, so that creates certain kind of caution. Was for the first quarter. And on the operating margins, yes, of course, the margins are the best in terms of, I think we did around 25-26% for the operating profit, which was roughly 4% higher than last same year, same quarter. And this is definitely because of the higher value addition we are now having in our product segment. So we are moving from a loose component manufacturer to highly precision-oriented manufacturer. Plus, of course, we are now working with many sub-assemblies, many additive processes we are doing. We, for example, are also installing a paint parts we have done. Statements which add value. So of course, there are better margins in such complexities. So on complexity, we thrive. The more complex the part is, the more margin we are able to command. And this is why in the new generational shift, which we are seeing, because most of these new projects are now taking shape. These are, electric segments, hybrid segments, or heavy commercial trucks. So here, the customer consciousness towards quality and precision is much higher. The world is more complex. BS6 engines or Euro 6, Euro 5, the noise emissions are very difficult to maintain. So designs from customers have also been very complex. So for that, you need a more craft-oriented product which has higher value addition. So that is why the gross margins look better because of this valuation which is coming, and that increase the margin also. And of course, profit before tax is a derivative of how we do operating. This is just a general summary or a talk which we wanted to do. Of course, we can speak endlessly, but the idea is to start with your questions first and then have an interactive session where we could understand something from you and you could understand more from us. So I think this is how the presentation is. I have not prepared anything else. If there are any questions, you can of course ask in the Q&A window, and we will try to answer there also along with it. This is it. I think I will end my screen share and we can start with the questions. Maybe before that, we can just check if the audio and everything is going. Check the question. Maybe we can unmute one of you and we can ask you that are you hearing us or not? Okay. How do I search? Okay.
आवाज आ रही है? आ रही है?
I think we need to look at not joined.
Not joined.
Robert or Pooja. Maybe we are checking. Yeah, Rohit is also not joined. But we can take the question.
Yeah,
they were
Ankush Agarwal.
Ankush Agarwal is right.
Ankush is there. Yes, Ankush Agarwal is there.
Yeah.
Mr. Ankush, you can unmute yourself and ask the question. You have enabled your mic.
Yeah. So my first question is on the gross margins. So as you have said that the improvement is on account of new projects which are more value added. So of this 75% kind of 74% kind of gross margin, is there any component of prototyping which we have seen in say last few years, wherein in some quarters there was some prototyping income that used to lead to like this kind of high gross margin? So is there any component, or this is purely because of the high value addition that is there?
So in this quarter, there was no such major prototyping activity. This is generally.
So, sir, going ahead, we would expect that this kind of gross margins will sustain.
Mix is depending on some seasonal activities also. Because of certain seasons, there are certain products which are having very raw material contact. So depending on sometimes these margins do occur in a particular period. But as you are generally seeing that our gross margins are generally so high. Because as product line is such that our raw material content is very low. Because we are doing all complex products very few complex products, so value additions are more. So that's the reason gross margins are generally higher. And generally, few. Any other question? I hope I'm able to clarify.
Yeah. So my second question was, can you give the debt and cash numbers as of June end? Gross debt and cash.
Normally we give at end of the year and the half year. So when the quarter 2 will close, then you will get all the numbers. Because as per guidelines, so we have to announce these numbers twice a year. So in half yearly, we will definitely disclose this.
Okay, no worries. And sir, just a feedback. So I've observed that increasingly a lot of developments around the company, say in terms of, commentary on results, con call announcement, everything expressed being shared on Twitter rather than first filing it with the exchange. So say commentary around why margins improved, why revenues were soft was given on Twitter, even though we never gave out the press release with results. So I would just give it as a feedback that we should start putting out press release if we want to share something, because if you continue to do it this way, I think in the longer run you might get on the negative end with the regulator in doing so. So just a feedback that I think you should know about.
No, you're saying that we are disclosing something on Twitter first, then on the financial. Your feedback is absolutely
Yeah,
wrong.
say for example, a quarterly results came out, right? So say revenues were XYZ and margins improved. So in the exchange filing, there was no rationale given that, this is what has happened, this is what happened. But that was shared on Twitter, right? Margins have improved because of value addition has happened and all that stuff. So ideally, if you want to share something, you should give it as a press release along with results, right?
I'll explain. It is okay. I know you're talking about my Twitter only. There are two things. One, of course, there is nothing. Margins have increased. That is a derivative of the results. In the results, you can see margins have increased. There is no different information to what is already available in the exchanges. Number one. Number two, the exchanges information comes first. That is when I somehow try to take.
Yeah, so I'm not saying that you have first published on the Twitter. What I'm saying that the qualitative commentary that you're putting out, I mean, if you are willing to share it, then ideally, if you can share it with the press, with the results itself in the form of press release, I think that would be a better form of corporate governance than doing what you're doing.
No, I take
it's just a feedback.
No, I take your feedback, but somewhere it is incorrect. There is nothing which is being shared, which is already not public as an information. And of course, what is being discussed is first disclosed to shareholders. But of course, if there is anything, we should have a general, what you call maybe an intimation to exchange that yes, maybe on the Twitter account there are certain information that people can have. It's a public account, and I'm sorry that that feedback is wrong when you say that anything specific is being shared, which is not being shared on the exchanges, because I am very cognizant about it. But I take it. I would remember. Yeah. Okay.
Okay, but
Thank you.
I mean, even I will disagree with you on this point because I mean,
No, I understand you. I have heard you. I've heard you. I'm not debating with you. Cognizant, but
that was all. Thank you.
Yeah. Thank you.
Okay, so maybe we can unmute Mr. Suresh. Yeah. Yes, Mr. Rudresh, you can unmute yourself and you can. Hello?
Mr. Rudresh, I have allowed your mic. You can unmute yourself and ask your question.
Hello.
Yeah.
Yes.
Are you able to hear me?
Yes.
Yes.
Yeah. See, I have got a couple of questions. So on the interest rate, we are seeing the interest rate at the higher level in the West. So are we in any way affected by that?
Interest rates are always country specific or the region specific. They are not the company specific. Obviously, if they are increasing across the country, so definitely we are also. But since we are also now A-rated company, so we are able to negotiate better markup. No bank can give me less than the prime lending rates. But yes, whatever the markup is there, if we can negotiate, definitely we can do it. But since our 70-75% is exports, and in exports we get most of our discounting or the packing credits. They are normally forex rated rates. Our interest rates are really very, very nominal. So, but there is no such major impact. But more or less, now interest rates are also quite stable. So whatever the increase has happened, it has already happened. So now more or less it is stable. Okay, any other questions?
And my next question is, see, because of the drought, we are seeing the traffic getting jammed at this Panama Canal. So, are we in any ways affected with that?
Your voice is cracking. Can you maybe come closer to your mic?
I'm asking about the traffic jam due to the drought in the Panama Canal. Are we in any ways affected with that?
Traffic jam, Panama Canal.
No. We do not have any exports to US. So that way we are lucky, and we are also not really aware that Panama Canal has such serious traffic. Yeah.
Okay. And my final question.
Europe, we are not affected.
Okay. And my last question is on the Hero Honda as well as Bajaj are coming with high-end bikes with partnership with BMW likes. So, are we exploring any opportunities with them with those kinds of joint ventures?
Prab will be able to answer you.
So basically, if you follow us closely, our entire success story is basically that we are into the premium luxury segment. So all super bikes, what are now being launched in India, we are working since 2009. So of course, the Indian manufacturers are, if I can say, waking up, or because of the industrial demand, are entering into it. But we, for example, in India, Kawasaki is there. We are working with them. We are working with BMW. We are working with KTM, of course, not India, but yeah, they are global big engine bikes, 800, 1000. We are working with Piaggio. Vespa scooter is sometimes costlier than the bike itself in India. So in the premium segment with the Indian manufacturers, yes, when they're entering, we are the first preference who are given. Recently, this new electric scooter was launched by TVS, I think a couple of days back. It's an expensive scooter which has been launched. We are the single sole supplier for their entire rear axle assembly and many other things. So, of course, once Indian manufacturers are also shifting towards high-end luxury, not luxury, but big cylinder or an electric scooter or a bike, we are working very closely. Not from now, from very initial years.
To put it slightly different way, that Harley and Hero MotoCorp are waking up now. We are doing for last 12 years. So that way we are ahead of them. And like in India, the biggest super bikes are BMW, TVS, that we are doing. Kawasaki, we are doing. And within next 1 month, one more major super bike is being launched, maybe in September. That entire transmission is being supplied by us. So since it is yet not launched, we can't disclose the name. Maybe next con call you will hear that also. And those super bikes are already going to be on the road. Harley and all will still take a lot of time. So that way we are ahead of this competition.
Thank you. And my last question is on the sequential basis, our revenue has got dropped. Can you throw some light on that?
Sorry, sequential basis, what has happened?
Our revenue has dropped.
Oh, quarter 4 versus quarter 1.
Yeah, first
Yeah,
quarter
yeah,
is generally our historically is the quarter one is always lower than the, as I explained to you earlier also, we have a seasonal demand. So quarter one is historically little lower than remaining quarters.
Yes, you can't compare or measure us quarterly I know quarter and quarter is a very investor-centric way to measure, but once we are seasonal, there are peaks and lows within the year, and that is how you have to see understanding about the business of the company. If the agricultural segment is growing, then some quarter would be different. If in the Europe, the summer vacation comes, so they do a quarter production higher a year before, quarter before. So there is a seasonality built in, and this is a kind of a trend. If you compare last 5 years, you can see how quarters generally behave. So that would answer you for future references also.
There's a real reason. Quarter two is always in Europe is a vacation time because summer vacations. Italy closes for 1 month, Austria closes for 3 weeks, Germany closes for 3 weeks. So obviously, quarter one they pick up less because whatever we ship in quarter one, they have to use in quarter two. Since quarter two is a vacation time, so normally historically it is always that quarter one is generally slightly lower.
Okay, so thank you, Rishi. I hope we were able to answer you.
Then Mr. Anirudh Shetty.
Sure.
Or
No,
Manish Gupta. Both are from Solid.
Mr. Shetty, we have unmuted you. Oh, we have enabled your mic. Can you unmute yourself and ask question?
Yes, I have. Am I audible?
Yes, sir.
Yes.
Thank you for the opportunity. I had a couple of questions. You mentioned our current EBITDA margins 25%. We're doing more, complex machining components. In the past, we used to mention that 22, 23% is a more sustainable EBITDA margin. But one takes a more long-term view going forward. What do you think is a sustainable margin, EBITDA margin that one should work with? And in light of the dynamics that happen in auto OEM, wherein as you scale up more with your customer, they tend to negotiate more on margin as they give you more wallet share. So what is a sustainable EBITDA margin one should work with?
You said very rightly. Unfortunately, customer also reads our balance sheet. So
no, but I think there is no specific number, but there is definitely a range. And the range you have seen between 23 to 26. Bad times you do 22, good times you do something like this. So we are maintaining that range because current product mix we have. Now tomorrow when we are growing, what customer segment, how the customer pricing is, how the situation is, that band shifts towards that direction. Right now, of course, with the current product mix we have and the kind of clients or the complexities we have, so I think we are maintaining a range-based margin which is flexing between these percentage points.
There has to be almost 5% of window will always there for fluctuation of the margins between quarter to quarter. Sometimes product mix, sometimes exchange rate, sometimes raw material prices. So if 22, 23 is the normal thing, so in some quarters it may be 26, 27 also, and some may be 20, 21 also. So technically 4-5% tolerance will always be. But generally, annualized basis, you see there will always be 22, 23, 24%.
Got it. So 22 to 26% with our current product mix, wherein a lot of our business is now it's dominated by transmission gears, which is very complex. So my next question is twofold. So given that we are focused on the niche transmission gear business, how big do you estimate the size of this opportunity is today in your estimate relative to our size? And we're doing other products like chassis, like suspension, forged yokes. So from a complexity perspective, from a margin perspective, how do these products compare with our transmission gear business?
Suspension is a very, very generic term for a vehicle product category. Suspension has a lot of sheet metal components also. So we are not doing any such run-of-the-mill suspension components. We are doing, actually, our core business is gears, making of gears or making of complex machine parts. Fortunately for us, in the latest suspension versions, there is a lot of application of gears also. And little positive thing that none of the Indian cars have these kind of features. But European cars, American cars have started getting these features. And you know, our company's USP is that we always have our first foot forward. So these suspension components which we are producing, they are actually basically complex gears being used in suspension. And they are now not loose gears. They are the assemblies or the sub-assemblies. So that way our margins are really good in these parts. Now you ask for the yokes. You know, yokes again is a very generic term because there are some routine yokes for certain Indian commercial vehicles. People buy yokes by kilos also. But the kind of yokes we have developed or we are developing yokes. Actually, yoke typically is a for commercial vehicle or a passenger car. But we are developing yokes for a motorcycle. It is unheard. Nobody will really know that motorcycle also has a yokes. We are developing yokes for a motorcycle application, where the rear wheel will be driven by the propeller shaft from the engine to the rear wheel instead of a routine chain and sprocket. Now, those yokes, obviously, margins are high because they are very, very complex yokes. So, you know, as a generic, we cannot really say you that propeller shafts have yokes have a higher margins or the suspensions have a higher margins. Margin is what product application, what product category is there. So, in fact, have we able to show them pictures?
We take to 10.
Yeah. So, if you are there on line for another few minutes, I already told Prof, but we could not organize this. We are showing you some pictures of yokes, which are we are already developing, and now it is at the sample submission stage, and startup production also will happen in few months. They are yokes for motorcycles. So none of the motorcycles in India uses it, and even the super bikes which are being produced in India, none of the super bikes are using it. But the yokes which we are producing is going to be used for 1.2 liter motorbike for our European customer, and it's a unique product. There are no chains, no sprockets. The wheel runs by the propeller shaft. So that picture will show you. So our margins are generally good in this category also.
Got it. So this 22 to 26%.
Yeah.
You saying something? We can't hear
Yeah.
Okay.
No, you said something?
No, so I just wanted to clarify that, you know, we're doing very complex stuff even in these new categories. So our EBITDA margin band of 22 to say 26%, we're looking to maintain it even with the new products. That's how
I said 20 to 26.
20 to
not
26.
20. Yeah, because 4-5%, 6% window somewhere in between. Because I'm saying quarter to quarter. Some quarter may be 2021, some quarter may be 26. This is how. So average
Right.
will become always by 22, 23, 24.
Okay, got it, sir. And so, you know, we have a tremendous opportunity in front of us. You know, we've in the past maintained very good track record of, you know, very low defects, very, you know, good timely delivery. So as we scale up, how are we ensuring that, you know, our quality standards, our delivery standards will be maintained? You know, anything that we're doing on the hiring, on the training side to ensure that our, you know, our stringent the requirements of our customers are, you know, will be maintained even at a larger scale.
No, I'll appreciate you touched a very, very interesting and tough and realistic question. These are, you know, whenever you start any new product category, whenever you start any new product variety, there are always ramp up issues, ramp up topics, ramp up challenges. Now, there are two approaches. One approach is we start producing, keep shipping and keep selling, and then one complaint comes and then we start taking the corrective actions. We as a company, since you said very rightly, we have to maintain a stringent quality and delivery requirements. So we always take a very, very cautious approach. So right now, since our product, historically our company was never in passenger car business. Until 2020, we were almost zero in passenger cars, and last year we did almost 6%. And this year, I think it will be more than 10%. So, since passenger car is first, and one more thing important is when we are saying passenger cars, we are not into routine again run of the mill like Marutis or Hyundais or all such things. We are into BMW 7 Series, Porsche, Mercedes AMG, BMW X7, and all such stuff. Aston Martin, our parts are going to Aston Martin also. Now, you can imagine the kind of complexities, the kind of stringent requirements, or kind of precautions we have to take in this segment. So obviously, we are taking lots and lots of precautions that there should not be any shock or any disruptions in a big way, or any such major disruptions. So we have a very, very stringent quality gate at every step of our processes, including not only manufacturing, including quality, packing, logistics, transportation.
Got it. And so, if I'm
rather, just give me one more minute. Rather, it is little bit hurting our current efficiency, because we always aspire to use our plant to use at 75-80% of efficiency. We're using only, as on today, 60-65% efficiency, because we are sacrificing little bit of our production, but to ensure that we are able to maintain good quality. Our order book position is, I think, 130% what we can produce. But we are not producing even 100, we are producing 80 or 90. So that whatever leaves our company, it is good. But without sacrificing any delivery issues. We are delivering on time to customer, but of course, we are taking a lot of precautions, and maybe within a short span of time, everything gets stable, and then we'll get used to, and then our focus will be to new line of business or the new product category.
Got it. So I have two more questions. Is it okay if I ask it now, or should I join back in the queue? I think there are other participants.
How long their question? Yeah. Maybe we can allow one.
Yeah, maybe one you can take now, and if both are short questions, then we can take both.
We can have short answers.
Yeah, then we can have short answers.
I'll give you the short question first. So, it mentioned the TVS electric scooter opportunity. So, we just want to understand what is the value of material that we are supplying per vehicle there?
That is too early to comment.
Okay. It's almost 10K. No, per vehicle. Your value addition per vehicle.
Per vehicle, yes.
Yeah, per vehicle is about 10,000.
10,000. Great. So I'll join back in the queue.
I would have not given that.
Yeah. Now, again, some of your friends will say you're not.
No, I have.
Yeah.
Okay, thanks.
But this is a very, very prestigious product category for us now, because all our investors are always asking that you are not present in EV, but we are always saying that yes, one EV we are there, but one, yeah, we are not present in India, but yes, the EV which we are there, this is now again, because typically all your EVs are 1.5 kilowatt or 2 kilowatt motors. This is, I think, 6 kilowatt motors. 7. I think maybe in Germany they launched 6 kilowatt, so might be somewhere. So again, it is almost 3 times or 4 times your routine Olas or Aethers or also. So that way we again maintained our presence into being into the premium side.
I think now we invite Mr. Rahil Dasani. Yes, I'll just make some. Mr. Rahil, we have unmuted. Yeah.
Yeah, am I audible?
Yes, sir. Go on.
Okay, so I have a few questions. My first question is, in the kind of products that we do, like the high precision gears and axle shafts, apart from us, who do our clients like BMW, KTM, Kubota source these products from?
Oh, so you're asking who's our competition in these customers, yeah?
Yes.
Your question is not clear. It's same question.
Yeah. Yeah, we got that correct, right? Right.
Yes, yes.
So of course, we are not competing only with Indian suppliers. These are export customers, so most of the suppliers are Europe. So I don't have the names, but of course,
No, actually, we are not supposed to disclose.
Also, even these are not anything which you would be knowing or I would be knowing. But of course, we know the competition, what it is. But I think I've answered this in the past also. The competition is from our own performance. If we are not delivering concept as a continued activity, then even if there is no competitor, it takes only 1 year for them to create, because then if the crisis is such that we are not delivering or there are blunders done by us, so of course these customers are very quality conscious, so competition can be created. Ensure that the quality is never compromised. Otherwise, there is never threat to any business. If you are doing well, if you are continuously performing, there are issues, everybody understands. But if you are meeting their timelines and there is no quality issues, usually in the past we have seen they don't touch your business until something different happens.
And there is one more safeguard for us. Historically, all these big OEM customers, they always have a very clear concept: one product, one supplier. If I'm supplying a single component, maybe in a complete motorbike or in the complete car, but that component, I will be the only supplier. They never use two suppliers for the same component or for the same sub-assembly. Whatever they have nominated to me or to any of our other core supplier, we always will remain its sole supplier for that product or product category or a product variety. And agreements are always for the entire project life. So there is no such threat in between. Okay, today they are buying from me, tomorrow they will start buying from some other body, and they will start squeezing our margins and all. So that safeguard is always there. But as Prav has explained, we have to be always doing 100% good on quality and delivery. Don't perform, then obviously they are ruthless. So that way there is a safeguard, but then there is a equal challenge for us also to maintain our quality and delivery always on time.
Okay, that was helpful. So since we cannot talk about the competitors, can you tell us who are the geographies which you are facing most competition from?
They are all global bidding. So, whenever a product comes, typically for any of European customers, for our kind of product category, China, Taiwan, Japan, South Korea, they were the natural regions out of Europe if they have to source. But now, thankfully, although we should never say that COVID was a good happening, but yes, COVID gave us a lot of opportunities, at least for Indian companies, because people have started thinking. In Europe there is a new concept as called, they say China plus one policy. So all OEMs have adopted this new facility, new policy, China plus one. It's not that they are abandoning China, but they are saying there should be another destination other than China. And India has a fairly good chance. And RACL specific, for us, it has become more and more faster road to approach. Where reason is that we are already there in Europe for last 8-10 years. So for us, it is a natural advantage.
Okay, got it. Thank you for that. My second question is, what new capabilities or core competences are we building today, which can take us from 500, near 500 CR in FY24 to 1000 or 1500 in the years to come?
Sorry?
How do you go 500 to 1000?
No, I'm saying what new capabilities or core competencies are we building today so as to bring more future growth in the coming years?
Yes, you said rightly. When you create the core competence and plan. As on today, we always feel only that technology companies will survive in future. So that strategy we decided almost 4-5 years back, and we have already come a long way. Now I can say we are a technology company. Now, second biggest important asset for a company to grow and go from 500 to 1,000 and to 2,000. Second biggest resource is the human resource. This is actually a very, very big challenge, which as of today, we are now preparing ourselves. And for this, our HR team and all our team members are really putting in lots and lots of efforts to attract, first of all, human talent, and then to train them, skill them, reskill them. And these days, there is one more concept that comes, de-skilling, because we always say skilling and reskilling. De-skilling also. De-skilling means some bad habits have to be eliminated. Over a period of time, you are living with a particular way of working, you have to unskill those things. So these are the areas where our team is working. But good for us is, as you are all aware, we have already got this great place to work certification for this current year, thanks to our HR team. And we are able to attract now talent, not only from our competitors, even from OEMs. We have now many senior employees who are actually left the jobs from OEMs, from companies like Mahindra and such other stuff. And of course, our biggest competitors also, some of the Japanese companies, some of the European companies. So this is how we are able to attract talent. So these two sources, technology and human resources, coupled with our technical competence, just definitely take this company forward. And I will sum up in this question in a very clear that we are on the right track. If Rob, you want to add anything to this?
Yeah, I think the journey from 100 to 500 was because of this only.
Yeah.
Because we added technology. Now we're reaping benefit. 500 to 1,000 is we have to sustain this and grow, because we have created first advantage in many product segments. And because of those technologies, customers have come to us. So now, of course, the world is also moving towards technology. So, for example, technically or typically a tractor manufacturer in India was never quality conscious. You see our agricultural business was in exports. But now, of course, we are working with many Indian tractor manufacturers. But the mindset of even a tractor manufacturer is changing. They now don't buy the products in the same way they were buying earlier. They're also now conscious of things like noise, many aspects of cleanliness. Emission norms have gone stricter. So the companies who would have not evolved by now would have already started to diminish, because these businesses we are getting not because they want to give to us, but they're not able to give to anybody else. For example, on sustainability, I think 5 of our key customers are clear. If by, I think, a certain year you're not 100% green energy, they will not even nominate principles, human rights, advantages not, conditions that not at you, your tier nth supplier. Even if I'm buying steel, many of these car manufacturers are asking the green content in the steel. Of course, we have to find a way, otherwise they don't give business to us. So, of course, in the changing world, if your change, so then numbers are just numbers. From 1,000 coming to 100 takes no time. Going from 500 to 1,000 again is all about the mindset. That is what we're changing, what will help us grow.
Got it. That was
Thank you. Thank you, Rahil. Any other question? We can, of course. Yeah. No, many hands are there. I don't know how to do a sequencing, but there is no FIFO system. Chirag Shah, if we can unmute. Mr. Shah, can you unmute yourself, ask your question, if you have? They have been tired by now.
Hello, am I audible?
Yes, sir, yes.
Yeah, thanks for the opportunity. Sir, one housekeeping question. First, your RM to sales is very impressive at 25-30% range. But when I look at the number annual report, I see something like loose tools and packing material. Are they linked directly to raw materials, or they're completely variable linked to the movement in raw material in terms of volume units?
Of
Actually, loose tool, because, once.
It is output oriented.
Yeah.
Packaging, if I'm selling more products, for example, I do maybe 700,000 parts a month, right? Now, of course, 700,000 doesn't mean always the same turnover. We do a part as low as 40 rupees also. We do a part high as maybe 8,000 rupees also. So now the thing is, which part is being sold at what volume? In some quarter, maybe the exports is higher, their packaging conditions are different. In some quarter, maybe the exports is higher, but not on those customer segments. So packaging and this tooling, of course, eventually what part is being made is a derivative of consumption. This is not part of the gross margin consumption. This is other expenses where we qualify. And this is connected with the output of the company, but not directly with, maybe you can't just say, okay, if the sale is growing by X, so the tooling consumption should also grow by X. It is not always that same part family is being sold, because if you know, we do 800 different types of part numbers with different volumes. So this is how this consumption would be seen as, should be seen as.
Okay, so loose tools and packing material is not necessarily a raw material item in that sense. They are not linked. Because
Yes.
when you ship a raw material, you don't need to ship these two things along with that. Not like that, right?
Loose tool is a consumable which is consumed while producing the part. It is our
Okay.
input. It is never an output. So is when we take the raw material, we have to shape it, we have to cut it, we have to machine it. So all whatever we consume during the process, that is loose tool. And packing material, of course, once you pack it, so somewhere it is linked directly or indirectly. But packing material is always a separate category. Like as per India's also, we have to always bifurcate these two separately. But packing material also somewhere
point, sir.
indirectly linked with the component.
And the second question was this job work and other contractual costs. The quantum is similar to our staff cost. So when do we deploy job work, and how does it work? If you can explain, it would be helpful.
Yes, that's a good question, sir. So basically, in our process flow, what we make from scratch to end, there are many processes. Many say typically, I think I've covered in past phone calls, maybe a part goes through 20 different processes to be then called fully finished part. Now, certain processes we feel are non-value added or require less quality or complexity. So we have a fixed or dedicated suppliers, vendors. We have a small vendor park. They work on our material. We buy the steel because steel controls is by us. And then they do this soft machining or an input condition for our input. These are controlled by, in the sense, quality systems are we work very closely with us. And of course, these plants are maybe supply 30 to 40 machines. So they are not small, but not big. And this is job of cost is being reflected in the balance sheet. And this is as a good cost in terms of the total cost to the sales, whatever we have in the balance sheet.
So, sir, would it be right that our factory labor cost would actually be far lower than this job work, right? So the staff cost that we have, in that the labor cost, the factory labor cost would not be significant, maybe 40% or 30%.
No,
I think he's confusing.
No, I got it.
Job. When you say job work has nothing to do with the labor cost.
No, I know what he's asking. In that sense, there is also so we have on-roll employees and we have off-roll employees. So all off-roll employees are also through a contractor. That comes in the job work expenses. So
okay,
it has job work plus non-roll employees, which is a good number. That salary is here. So that number plus the salary on the balance sheet is the total employee cost.
Fair point. Yeah, this is what I was looking for. This is helpful.
Yeah, yeah.
And
Yeah, yeah.
So last question, if I can just take one more. Sir, just out of curiosity to understand, it's a follow-up on the earlier questions that somebody asked. So globally, your competition set are large companies or they are niche companies in terms of their size? If you can help us understand that, it would be helpful. So they are like billion-dollar, multi-billion-dollar companies having multiple parts.
Everything.
So no customer likes their supplier to be bigger than them, then the control goes away. So customers have a psyche that there should be of a certain size and a level. But yes, in general, maybe smaller than us. Europe, not big companies are there, but there even 30 employees is bigger than 300 here, because that's the difference of cost of employee. But automation is very high there. So yeah, eventually the jobs what they are doing, let's say, are more advanced, more critically complex, and you can't compare the turnover. Oh, sorry, the company size, but typically in this range only, maybe 20 to 40 million US dollars.
Oh wow!
So they're bigger also. But
no, fair point. Fair point. I was under impression that, say, for example, there is a big company which does similar parts also, say a Bosch or a Magna or something like that.
No. Some of our competitors are very, very big companies.
But they are not direct competitors. They are bigger than OEMs.
Yeah, fair point.
There are one-offs. There are one-offs, of course.
There are some competition which are very big companies, but normally they are our size or maybe 2 times more.
And so secondly, generally, whatever business that you are winning, be it passenger vehicles or traditionally in two-wheelers, so these businesses, you are largely replacing an existing supplier, or it's a new product that comes up where you are going in, or or when the platform comes for a major upgrade, you are invited and you are actually, most of your business wins are replacing an existing supplier, or how it is?
Global business, this OEMs work in a slightly different style. Like our customers are all big brands. So they are not into business for last few years. They are in business for last few decades, or maybe one of our customers is now century-old customer also. Now, they always have their supplier base. So one is the existing supplier base. So like we are also supplying to few customers for last 10 years, 15 years. But some customers we are adding new. So when we are adding, means that customer also has chosen us as a new supplier. So these customers, I will say, they are very, very intelligent, smart people. They always keep a mix of new suppliers and old suppliers. So frankly speaking, to create a healthy competition, they always keep on exploring new suppliers. But in parallel, they keep on nurturing their current suppliers also, because they know that if we leave all old suppliers and new suppliers that are there, if something goes back, then there is no fallback. But to keep the competitions, then definitely they keep on adding new suppliers. So for us, it is a new opportunity. And one more important thing with these global OEMs is they are now experimenting new territories also. Where historically, maybe 10 years back, nobody could imagine, maybe not 10, maybe 15 years back, nobody could imagine that a European customer will buy gears from India. 20 years back, no European customer would have even thought to buy even a plastic component from India. So gradually, India is also gaining much respect and command into the global market. And if India is gaining interest in commanding global market, but some of the existing territories like China, they are actually getting not too expensive, because China was earlier considered as a LCC country, low cost country. Because earlier the high cost countries were Japan or Europe or US. Then China was a low cost country. Now, frankly speaking, China is also no more a low cost country. Beyond COVID, China inflation is also really hitting them very hardly. That has also helped the Indian customers, Indian suppliers. And OEMs also keep on experimenting these things. And this is how the business growth takes place.
Yeah, thank you. And sir, just one request or a suggestion. You generally release a presentation every quarter. It would be helpful if it can happen before the call is scheduled, sir. Just a suggestion.
For the
Sir, you have a presentation on a quarterly. You do give out a quarterly presentation, right, sir? To the stock exchange.
Yes and no. We usually send a presentation. I know this time it wasn't, but you're saying with the results, the presentation should come?
Yeah, so before the call, if you are releasing a presentation, if you can release, so we can glance through that. That's it, nothing else.
No, I know what you're saying. So, so the practice what we will follow and we are following, we will share the presentation with the results. Usually we just send the results. There is no interpretation, so we should do that. On the call, to be honest, it is who I make. So sometimes it gets late because I get occupied. I make it myself. That is how we want to do it.
No, I'll say he is a smart guy. He knows if he makes the presentation, he already uploads the presentation that people will not join for the call. So to attract some people, he keeps the presentation up his sleeve.
So I get your point. So these call presentations are sometimes very punchy, sometimes very what you call S data. This time it was nothing. But yes, on the results, we will definitely start sending together the presentation.
Yeah. The last question, if I can, on anything on M&A, any thought process you would like to share, given that there are a lot of small companies, maybe with some of them could have better technologies or capabilities, which could be bucket filling for you.
Before that, I will ask this question. You're asking very nice, brilliant question. If it is okay for you, what profession are you from, sir?
You're asking me, sir?
Yes, sir. Yes.
So I'm a part of equity markets. I'm a part of a PMS called White Pine PMS.
Okay.
Okay.
And how can I stay in touch with you, sir? If it would be helpful if I can get your coordinates, it would be great later on, so that if you.
Yes, everybody can be in touch. There is a investor that I think email ID. You can of course email it to us, and if there are any questions, queries, we will reply. Lately, I'm found more on Twitter, but some people don't like it, so I have to reduce there. But otherwise, I will. If there are any questions, we will definitely answer through that.
Yeah.
But on the M&A, of course, this is yes and a no answer. If anything comes interesting, why not? Are we hunting something very religiously? No. That's how I would answer.
Okay. Thank you and all the best.
Thank you, sir.
Thank you. So maybe we can take one more after that.
No, we have 3 more minutes to pass. So yeah. And which are left, then maybe. Yeah. Mr. Palash and Kabir.
Yeah, thank you, sir. Hope I'm audible.
Yes, sir.
So, sir, congratulations first for creating such a value for shareholders. So my question is around the 1,000 crore vision that you have given. So apologies for my ignorance if you have spoken about it before. So what gives us confidence that we will be achieving this? And yeah, my question is a little long, so apologies again. So will we be surrendering our margins? Will we be going for high volume, low value products, or the margins would be maintained? Yeah, again, will there be any acquisition or anything like that, or we can achieve that 1,000 crore vision by ourselves only? Yeah.
But have we
that's something that is not a vision.
We are not given 1,000 crore vision.
But maybe that is a derivative of we are giving.
Maybe
it's an ambition, I can say.
Yeah.
But
So first of all, right now in a formal way, we have not given any 1,000 crore vision. So far, our vision was our first milestone is 500 crores. One we achieved 500. Yes, we have to draw a vision for 1,000 crores also. But to answer your remaining questions, biggest important is how soon we achieve this 1,000 crores. Historically, we are growing about 20-25% per year. So if we really maintain this trend, it will take at least 4, 5, 6 years in achieving this 1,000 crores. So of course we have to have that kind of product demand and product sustainability also. And and side by side, there is a lot of talks on the EV and the alternate fuels and so on and so forth. But in parallel, we have to really grow very fast. We have to look for some inorganic methods of growth also. But coming to the margins, if it is organic growth, maybe it will take 4, 5, 6 years. Then we may still achieve 1,000 crores and margins may not be negatively influenced. But if we do a little inorganic growth, definitely there are some M&A possibilities. All maybe this 1,000 crore dream will come pretty fast. But then definitely it will affect some of your borrowings or any such thing as you have to do. Grow inorganically, we have to raise some funds and all. So obviously it all depends when we really draw this 1,000 crore vision, that it has to be organic or inorganic. And that's the reason I said until now we have not done any risk vision forecast for 1,000 crore. But yes, we are working on this topic and to really see that which route to follow. It has to be only organic growth. Because this is, you also understand that we are maintaining about 25% of average growth for last 3 years. So eventually if we, and this is a above average growth. But if we are able to sustain this growth, definitely growth vision document of 1,000 crore will be at least 5 years away. So eventually we have to really see that how it takes forward. But depending upon the growth trajectory, the margins will also depend. As of today, we can't strong prediction on this.
Okay, maybe we can come back to your questions later because more cognizant of times. Is there anything which is unclear on this question?
No, sir. I got my answer. Yeah, thank you. Thank you. I have more questions. I'll join the queue if
Thank you, sir.
time permits.
Still, I don't know, we have unmuted you. Manpreet, if you can unmute yourself.
Yeah, good evening. I just was having a look at the financials. So there's an increase in the depreciation expense in this quarter. So just wanted to understand, like, is there any major capitalization being done in this quarter? And what will be its impact in this financial year?
Yes, there is no major depreciation, major expansion, but as per the capex plans we have, of course, capitalization is happening, and we are investing every year.
So, but in this quarter, the depreciation expense has gone to 6.5 crores, I think, from 4.8.
Yes, because there was some capital WIP also, which then converted into a depreciation expense 31st March. So commissioning is again, sometimes the machines are arriving as and when. So it's not a perfect quarter deployment every time. Sometimes maybe as per the project urgency, some machines come early. So yes, as a total year, it should remain same. Maybe in one quarter is reflecting higher because of the capitalization of, let's say, an expensive machine would have come. So that is how it is reflecting the depreciation expense.
Last year capitalization also.
Yeah, that's because every year our gross blocks is increasing, depreciation will also increase.
Okay, sir. Thank you, sir. Best of luck.
Thank you, sir. Mr. Chaudhary, can you unmute yourself?
Hi, am I audible, sir?
Yeah.
Sir, in a couple of months back, we had given our guidance for the year FY24 as around 470 or 500 crore. Do you still maintain that?
Yes, we have to, because this is, of course, our earlier plan was to reach 500 maybe a year later. The commitment and the business we are having this year is 500 is what we can achieve. But as we told you, despite of having all the business we are maintaining a cautious approach to take care of the new projects which are now, actually having field deployment actual product. So we are running the plants at 60-70%. In the next quarter, which 1 month has already passed, here also we have kept that approach. Slowly and steadily, the demand, for next month is 50% of the entire quarter. If we can, we don't want to just sell. We want to have a quality product. So as we explained, we are maintaining that conscious approach. And as of now, things are on track. Of course, there's minus flexibility built in the plans, but there is nothing wherein there is dearth of business. It is just how we are managing the new businesses.
Okay. And in terms of our project pipeline that we have, last call we spoke about one of the contracts that we lost to one of our competitors, and there was also discussion of another project in China which we were bidding for. So any other such similar large projects that are on the anvil which will
Yes, there is one project which we right now cannot disclose. We have been awarded. It's a very big project, but we have to wait 1 quarter. We will disclose in the next phone call. It is a new segment. Some exciting things are there, but as of now, I would want to refrain commenting on it because it is in the final stage. But everything is done. The document has to come. But it's a new segment. It's again a different kind of product, different kind of area we are going to work. That is a one big project which is coming. The one which you are talking, I think there is still, still not.
But that China thing is still
open.
I think by end of September they have the bidding to close.
But there have been some very projects which are not. Wins have been in this quarter as well. So that keeps on going. We only disclose something which is very big.
Substantial.
Yeah, something which is within 15-20 CR.
Yeah, like we already got one contract from one of our like €500,000 single component.
Yeah.
So that's super duper by. Frankly speaking, when we are now 500 crores company or 400 crores company, for $500,000 single component, we feel, it's not a big product. But that is, again, a very, very prestigious product. That order we have already got. And for a super bike of 1.3 liter, it's a RACL for that. That order we have already got. And the SOP has to start within the next couple of quarters. Likewise, there are many such new things in pipeline.
Okay, so what would be our capex plan for FY24 and FY25?
FY24 we already disclosed to stock exchange, I think. Yeah. No.
But for next 3 years, they've given that 250 plan, right?
250 crores. We have already signed, in fact, the agreement with government of UP also until FY26. Total investment of 250 crores.
Okay. And what sort of?
It's already 26, basically 27. Sorry?
But considering last year also.
Yeah.
This is still FY27 you confirmed.
Yeah, it will be, because,
27,
November 20, the government of UP announced some kind of industrial promotion schemes and incentives. So we have signed the MOU with the government of UP for that. So for that we are really, and we are seriously working on that.
These are already part of the disclosures.
Okay. And would the on a normalized or on a normalized utilization of the plant of this incremental 250 crore capex over the next 3 years, would the asset turns would be closer to 1.5 or
not 3 years? This is a 5-year plan we gave you. Asset turns, of course, we have replied. Target is to go till 2. Right now, I think it's 1.3 to 1.4.
I could not hear you. Is it two you said? Number
I'm
two?
saying our target is to go to 2. That is the mission. Right now it is 1.3 to 1.4. And the average, what you say, is 5-year plan, not a 3-year plan.
And just last question is, you spoke about in your earlier calls about 25 to 30% potential growth over the next 2 to 3 years at least. Is that in terms of your inquiries and your the new projects that you're getting? Is that does that still hold?
Yeah. That there is no question. There's no doubt there.
You're not facing any issues as far as the slowdown in Europe and other places are concerned?
We are hearing about it, but we are
not witnessing.
So.
Okay, sir. Thank you. All the best.
Sometimes what happens when people are not able to achieve, they start making strong narratives go. Europe is declining. Europe is declining. We have never seen decline. We have seen it growing.
Okay, I think Anirudh, you still have a question? I will unmute you.
Just two questions. One is, in our presentation, we have spoken about our core competencies. This competencies right now, we are using it to, create products for the auto segment. Is there any plans to, use them to foray into other segments which are non-auto, and are they part of our, 5-year journey, or that's something we'll think about after the foreseeable future?
In fact, I think you wrote this question, you or somebody else wrote, but it's a good insight. We are also thinking seriously to enter into this. We are actually looking for industrial products. In Europe, there's a lot of demand for industrial products as well. So far, although we are doing industrial products with 2 big European companies already, and one is incidentally General Electric. But the inside will also focus onto this area, because automotive is, yes, we have already made our big presence. So area is to do industrial products.
And is there any sort of aspiration that we have by, say 5 years, 10 years out, we want to bring our non-auto share to a certain share of our overall revenues?
Need actually for that.
Auto will always remain here. Auto drives the economy here. Auto drives everybody. So we should not say that auto will always remain a dominant player in the world economy.
Because within auto, we are already hedged. If you see the industry bifurcations, we are 40% 2-wheelers, 3-wheelers, or not 3-wheelers, the cars. And this is how that hedge has remained. 6 years ago, our 3-wheeler business was 20%. And people used to ask what will happen. 3-wheeler is declining. Now 3-wheeler is, I think, 3%. So of course, automotive industry is changing, shifting. We are also changing with them. That is one. Second, of course, the industrial and aerospace also is another aspect where we are considering. We had done some on-civil military aviation in the past through HAL and all, it was minuscule. These 2 areas we will think we are working towards it, I would say.
Got it. So thank you for taking my questions. All the best.
Thanks. Okay, I think we are done. Nobody else. I had to show that photo for the yoke. I'll just show it and finish. This is what a yoke.
So this is a product which we are developing for a motorcycle. Complex part.
This will go like this only. It's a forged in the sense of, but there is no final or further activity to happen on this. just as we were discussing, so we thought to show. Yeah, I don't think there is any.
Sir, can I ask one question? If yeah.
Yeah, that's why I am here.
Yeah. Okay. Thank you. Thank you. Thank you for that. So, sir, just two questions. So, one is, what would be the main constraint for growth? Like, is it the training of manpower, availability of manpower, or acquiring of new land? And my second question is, in terms of percentage, what is the range of content per vehicle that we give to our customers? So, yeah, these are the two questions. Yeah.
Look, for growth, cannot happen with a single dose of vitamin. It has to be multivitamins. So growth will not happen only with the manpower, only with the technology. There has to be a financial resource also. There has to be a customer also. There has to be manpower also. It's a combination of all the factors. So end of the day, one has to really uh, draw the roadmap that how much we can grow. Because there are companies as big as 2 lakh crores also, and there are companies few crores also, few lakhs also. But the bandwidth which you are creating, that okay, every company works with a vision. So one has to draw the plans as per those vision. So we are not drawing any vision that we have to be a 10,000 crores company. Right now, for the short term, for 2 to 3 years, our growth plans are we have to grow 20-25% of our growth in an organic way. In between some inorganic opportunity comes, we are not saying no, but for that we are preparing ourselves. And otherwise, you can't really say that what are the limiting factors. The limiting factor cannot be one. It has to be combination. First of all, it has to be thought process. We say that, okay, we grow 10,000 crores, but the limiting factors, no. We are not saying we have to grow at 10,000 crores. For next 2-3 years, we have to grow at 20-25. And we are working as well. What is your second question?
Sir, it was about content per vehicle. So what would be the range, just if you can give me, in terms of percent of, yeah.
This is too wide a question to answer because vehicle has so many components, and for us, we do not have this kind of database, and to be very honest, it becomes very, very difficult to answer. But it depends, there are some vehicles like a particular motorcycle of our European customer. My value addition per vehicle is almost $160. So maybe 17,000-18,000 Indian rupees. And if you really see any of the Indian motorcycles, they are selling at 100,000 rupees. It is almost 20% of the cost. But that product is more than 10 lakhs of rupees. So we can't really compare any such thing with this rough numbers. It's only depending on which product you're supplying for.
Okay, thank you, sir.
Yeah, thank you, sir. All the best to you, and please keep sharing those videos on Twitter. Yeah, yeah.
Now people confuse me to share.
Thank you all participants for joining and participating today.
Okay, so really thanks to all of you. It was really very, very encouraging interaction with all of you.
Thank you. Bye.
Thank you.